Everybody, it's Mark Yegi. Welcome to another weekly stock market update. I was wrong last week, right? I was wrong, I'll admit it. And that's what the beauty of the market is sometimes you can be wrong. So let me show you what I'm talking about and why I was wrong. Here we go. So Happy New Year, by the way. And hopefully you're going to have a phenomenal 2024, happy, healthy, full of love and prosperous and all that stuff. So let's go. So just got off my mastermind call. You're seeing the market in this major melt up since November 6th. And here we are, January 6th, 5th or whatever. And that's 2 months. That's a long run, 2 months of straight up. Look at that. That's like almost a check mark. Now it's tapering off a little. We had 5 days in a row. And that's where I thought, well, I think we might be going into a little bit of a correction. We might turn yellow. We lost a little momentum. But boy, it came, even we sold off on such little volume that the market's like, well, I think we're going to go back higher. That's where I think we are. We have 4 green lights. And until the market tells us that we don't, we have to keep buying or continue to hold or continue to collect the juice like we do in the cash flow machine. So 4 green lights tells us that systems are go. So 4 green lights now is 75 to 100% allocated in the right stocks. The NASDAQ, you can see, doesn't look that healthy. It had a gap down on pretty decent volume, and it went down. But it's the end of the year, so you can't put 100% credence in all this stuff. But it went back down. It's below the 21-day moving average, but it's not down to the 50. That's a healthy thing. I could go there. It doesn't look like it wants to go there. It looks like it's kind of done selling off, at least for now. We'll see. S&P 500, the same thing. It's actually bouncing off that 21-day moving average. That's healthy. The Dow Jones, look at that. That didn't even sell off very much at all, right? That's just a beautiful check mark pattern all the way straight up there, right? So the Dow looks pretty good. This is a kind of a melt up that I remember going through several times where there's all this bad news, but the stock market keeps going up. And the Fed has just talked out of both sides of their mouth in the last couple of weeks. A couple of weeks ago, it was like, oh no, we're not going to lower rates. And now they're like, yeah, we're going to lower rates. Listen, we're in an election year. They're going to lower rates. The guy wants to keep his job. He wants to make the president look good, whatever, whatever goes on behind the scenes. I don't want to get into that. But he's going to lower rates, or he's going to print more money, which he's already doing. He has to, or both. I've been saying that for a long time, and you know me, I'm always early. All right, the New York Stock Exchange Composite Index looks about the same as the last one. Sure, we had a little bit of selling, but it was on low volume. If you look at those volume bars at the bottom, pretty low volume. That's not significant selling. And then the volatility index, yes, there's some bouncing up toward the mean. That's what it tries to do, but it wasn't that strong. And we're coming back down the other side on that bounce. So all systems are kind of go. This is something that I thought was interesting, is this bank index. And you can see that bank index bottomed at 71.32, and it's almost at 100. That's quite a comeback here in a couple of months, since basically the end of October. So that's very healthy with the banks. Here's the theory, folks, is that the Fed, if they lower rates, when rates go down, the Treasury bonds go up. And the Treasury bonds are held on all these banks' balance sheets. And that's why we had such a huge drop. If you look all the way to the left side of this chart, we had a huge drop in those balance sheets and the bank stocks themselves all went down because of the drop in the balance sheets. Well, now if they lower rates, the balance sheets are going to go back up because the treasuries on the balance sheets are going to be worth more. That's the theory, and that's probably why this bank index is running up, which means the banks are running up, right? So you're seeing a big gap up to make this little consolidation here over the last 3 weeks. Very healthy stuff going on in the bank index. Apple, for some reason, is having a little bit of a technical sell-off. I suspect it wants to go and test that 180 level, which is the 200-day moving average. It's healthy to test the moving average, the 200-day moving average every once in a while. You just don't want it to be below the moving average. So we got to watch that and see if it's going to go below. But you can see a major sell-off in the relative strength rating on Apple. Other stocks are doing well. Apple's selling off for some reason. It's got some downgrades, got some issues in China, blah, blah, blah. Like, I don't think Apple's going anywhere. So I kind of welcome these little sell-offs because they're an opportunity to buy. Tesla's having a bit of a sell-off, but look at the volume at the bottom. It's very low. To me, it's a healthy sell-off then. It's going to go bounce off that 50-day moving average. It may even test the 200, the black line, which is a little bit lower. So what? If it's doing it on low volume, to me, it's healthy and it gets rid of some weak holders there, and it runs up the other side. So I don't know if that's going to happen. By the way, this is just education and information. It's not stock market recommendations. Do your own research, talk to your own financial people, etc. Let's see, I'll do one more. All right, Super Microcomputer. This is a company that I put out on my predictions for 2024 list this week. And you can see it's making a nice long consolidation between 357 and about 228, somewhere in that range. And it's just coiling the spring for a long time, right? The longer it coils that spring, the more energy it has when it finally blows out of that spring area. And that's what it looks like. It had a really good healthy test over this week of the 50-day moving average. You can see it yesterday and the day before, right around that level, bounce back up. That's all healthy. I suspect it wants to go take out that 327.55 swing point and probably make a beeline for that 357 swing point, filling in that gap on the way up. So we'll see how it goes. Meantime, I hope you have a fantastic new year. Best wishes from me to you for lots of love and prosperity. I know I already said it, but I might as well emphasize it, right? And as always, thank you for support here at the channel and whatever comments you make and the subscriptions and all those other things that you do. I sure appreciate you, and I'm grateful to have you here, and continue making these as long as you continue to like them. So have a great weekend, and I'll see you next time. Take care. Bye.